What's up everybody, Nate here, and if you thought we were done talking about insider trading allegations, well, you were wrong. We have brand new insider trading allegations, but this time it's actually not our Congress members in Washington, D.C., shockingly enough, it's actually CEOs on Wall Street. Allegedly, some insiders at Peloton sold around $500 million worth of Peloton stock right before a massive drop in its stock. This is all according to some SEC filings, and in case you didn't know, Peloton stock has exploded over the last year or two, but recently it has gone on a massive decline, and we'll talk a little bit more about that later. But in today's video, we're going to be talking all about what is going on with these allegations and what actually happened with some Peloton insiders as far as selling their stock. But before we get into all of that, smash that thumbs up button below. I really appreciate that here on this channel. Lets me know that you like this video and that you want to see even more videos just like this one. Thank you for doing that. Now let's try to find out exactly what is going on here. So Peloton stock hit a new week low of around $29.11 on Wednesday, January 19th. That is actually super low considering on December 18th, 2020, Peloton stock was valued at around $134 a share. And throughout the entirety of 2021, Peloton consistently started to drop in share price. That means that Peloton stock is down by 80% since its all-time high set back in December of 2020. But according to some SEC filings, some higher-ups at the Peloton company actually sold around $496 million worth of their own company stock just before it started its massive decline back in 2021. Reading directly from the filing here, we can see that all of the sales were from 10b5-1 plans. Those are basically pre-scheduled selling plans, and we'll talk about how that is a little bit of a gray area with insider trading later on in this video. But basically, all of the executives at Peloton had all of these trades scheduled ahead of time. We really don't know though how many of these sales were options. So how many of these sales were predetermined at predetermined prices when those executives actually made the determination to file the 10b5-1 plan. Also, according to the SEC filing, a lot of the selling actually started when Peloton reached around $80 per share, and the selling continued until Peloton reached $100 plus a share. This all essentially continued until the early parts of 2021 when Peloton executives finally stopped selling a lot of their stock because the stock was actually decreasing in value. So this happened at about February of last year. And it wasn't just one or two executives or insiders that sold their stocks at Peloton. There was an entire slew of executives that started to sell their stocks because Peloton was doing really, really well at the time, and they were forced to because of the pre-scheduled nature of their SEC filing. So according to a CNBC article, John Foley, the CEO of Peloton, sold around $119 million worth of Peloton stock back in November of 2020. At least that's when he started to sell a lot of his shares. Most of the shares that he sold were valued at around $110 a piece. And according to his SEC filing, this was all a prearranged deal just like everyone else in the Peloton organization. To be more specific though, it was to sell a limited amount of the company's shares for personal financial management purposes. So basically he wanted some extra cash, so he sold millions of his shares. But here's where things start to get really interesting when we talk about insider trading. John Foley was supposed to sell around 2.4 million shares of Peloton stock through October 2022, but back in August, he actually terminated that deal with his own company. And he never gave a reason for why he terminated the deal. Remember, he was supposed to sell shares through October 2022, but on November 4th, 2022, John Foley and the rest of his staff essentially announced that Peloton was going to be slashing its financial outlook for the rest of the year and for the rest of 2022. Shares of Peloton really started to drop after that. We also had a ton of other top executives in Peloton that started to sell millions of dollars in shares from Peloton in 2020 and in 2021. The president of Peloton, William Lynch, sold more than $105 million in Peloton shares in 2021, with 72 million of those shares being sold in February at an average price of around $144. Again, a really strange time frame, because if you look at Peloton stock, that is right around when Peloton started to massively decrease in value. You also have Hisao Kushi, co-founder and chief legal and culture officer, selling more than $90 million of his Peloton shares, most being priced at around $110 a share, and the company's chief product officer, Tom Cortez, selling more than $60 million of his stock, along with Peloton's chief operating officer, who sold more than $25 million in Peloton stocks in 2020 and in 2021. And we're not even done here, because we have some board members that actually sold millions of dollars in Peloton stock too. Specifically, Karen Boone sold around $20 million of Peloton stock back in, you guessed it, February 2021, right around when the Peloton stock was starting to dip. That was at about $140 a share. Overall, with all of these executives selling their stock from Peloton, that equaled around 20% of all of the shares that Peloton has. That is a pretty big chunk. But so now, why are people considering this insider trading? Why are they accusing Peloton executives for insider trading? I mean, just because they sold at specific times isn't technically insider trading. Insider trading, by definition, is when an individual or company representative is trading a public company's stock or other securities based on material, non-public information about the company. So in layman's terms, basically all that means is that individuals know a certain amount about a company, and then they trade the stock based on that information. And the kicker here is that nobody else in the world has access to that information. So things get a little sketchy when we start talking about company CEOs and the amount of stock that they hold within their companies. I mean, most company CEOs get most of their wealth from their company's stock. Take Elon Musk, for example. In 2020, Elon Musk made $0 from Tesla, so he did not have a salary even though he was the CEO of Tesla. All of Elon Musk's wealth comes from stocks he owns and the assets he has with Tesla and his other companies. And that's not something that's super unique to Elon Musk. I mean, you have a ton of other CEOs that don't really make any money from their company. They only make money from the stocks that they have and own. A stock itself doesn't give you any money. However, when you sell that stock, you can make some serious cash. And sometimes you also have to pay some serious taxes. Like Elon Musk now has the largest tax bill in American history because of all of the stocks that he sold back in 2020 and in 2021. But this is where we start running into some issues, because company CEOs can buy billions of dollars worth of their own company stock. And that presents a few problems, because these CEOs know everything that is going on with their company. So if something changes, they have a big announcement, or they know that their company is not doing well, they can essentially sell off their stock and make some pretty serious cash before a lot of those announcements happen. So literally, CEOs are insiders, and they're trading their own company stock that they know pretty much everything about. And the New York Stock Exchange is supposed to be as transparent as possible. That's why we have earnings reports, and that's why all of these companies are public. Everyone that's trading on the New York Stock Exchange is supposed to have the same information when it comes to these companies. That keeps everything fair. But CEOs know a lot more about their companies than you do. So John Foley essentially sold off millions of dollars of his company's stock, and then just a few days later announced the company was slashing its earnings expectations, which means they are telling the public that they're not going to be making as much money as they did quarters prior. That made the stock tank, but they actually sold before the stock started tanking, so they made a ton of money and then exited the market with their own stock when it started to drop. And now we see a lot of those executives are done selling their stock, but they're done selling the stock when Peloton has reached a new 2-year low. low. And sort of the fix that we have with the New York Stock Exchange, the SEC, and a lot of these big company executives is that they have pre-arranged contracts of how many shares they can buy and when they can sell. So basically, if a company reaches certain metrics, Elon Musk, John Foley, or other company executives will have the option to purchase a certain amount of shares in their own company. They have to do this by a certain date. This contract essentially continues for as long as they are CEO or an executive of that company. But on the flip side, they also promise to sell those shares at a certain time. This way, it's a little bit more transparent to the public because they're not just selling when the stock is going down. There's not just a random date where Elon Musk is just dumping billions of dollars of shares in Tesla. He has to sell those shares at a certain date, and sometimes that date can be month after month. But the bottom line here is that he is forced to sell those shares. And that is basically what happened here. So you had Peloton executives who entered a contract with their own company to buy a certain amount of shares in Peloton if the company reached certain metrics like earnings, sales, or revenue. And over the last 2 years, it's pretty safe to say that Peloton reached some revenue goals. I mean, Peloton was one of the biggest stocks of 2020 and 2021. And that wasn't by accident. I mean, people were inside a lot more and they were spending a lot more time at home, so there was a need for bringing the gym basically to your own house. Peloton was kind of growing and becoming bigger at that time, so when the pandemic first started, Peloton exploded, especially since gyms around the country were completely closed. So the executives entered this contract and then they started to buy shares. But the contract, like I said, will tell them when they need to sell off these shares too. So a lot of them started to sell their shares back in February, and most of them are now done selling their shares, but that still doesn't really explain why John Foley decided to cancel his contract all the way back in August. Well, like I said, he was supposed to sell around 2.4 million shares through October 2022, but he only ended up selling around 1 million shares through August. And like I said, he didn't really give a reason for this, and that was right around a time when Peloton was right around that $110 mark per share. Entering now fall of 2021 and the early parts of 2022 though, Peloton has dipped even further. So you gotta wonder, why did John Foley and these executives sell their shares? Why did John Foley not give a reason for selling his shares around August of 2021? Why did he terminate that contract with his own company? Well, Peloton hasn't really said why all of these executives have started selling their shares, but you can pretty much imagine it's because of the way our economy is recovering from the pandemic and how it started to recover back in 2021. We had things start opening up back in 2021, including gyms. So a lot of people ditched their Pelotons and started to go back to traditional gyms. That kind of explains the reason why Peloton started to dip, and it explains why Peloton leaders wanted to drop that stock. But again, all of these Peloton executives had that information before they sold their stock, so they could literally see from their end that sales and revenue were going down. So John Foley may have wanted to terminate that contract because he knew that he was probably going to sell a lot of his shares at a loss. Peloton is now around the $25 to $30 range per share. And if he bought a lot of those shares at around $110, well, then he pretty much knows that every single share that he bought is going to be sold for a loss. So he basically just decided not to do that, which has led a lot of investors to pretty much accuse the Peloton executives of insider trading. And I would not be surprised if we're going to see an SEC investigation on these Peloton sales. And like I said, Peloton executives are not the only people who are being accused of insider trading right now. I've talked a lot about this over the last few weeks because it seems like insider trading is becoming a bigger and bigger problem from Wall Street all the way to Washington, D.C. We have members of Congress and members of our federal government who are being accused of insider trading pretty much every day. And now we have a ton of company executives who are also being accused, like Elon Musk and Jeff Bezos. Those two individuals have sold around $170 billion worth of shares in their respective companies, so Amazon and Tesla, over the last 2 years. This is at a time when both companies have essentially exploded in value. I mean, the stock market in general has done pretty well, but Tesla and Amazon have done extremely well. So I mean, I'll definitely be following this one and to see if more information is going to come out on all of these SEC filings and if this was really insider trading or not. Smells a little bit fishy though, at least at first. But enough about me. I want to know what you think about this issue. Do you think that this was clearly insider trading from the Peloton executives? Or do you think this was all just one big coincidence? As always, whatever your thoughts are, leave a comment below before you go. That is it for me, and I hope you liked this video, and if you did, be sure to hit that subscribe button below. Be kind out there, and I'll see you all in the next one.